Hey guys, it's Leaf West. I had a trading room lesson today, and I didn't record it. I'm not sure how that recording function works. This might be better just to summarize in a less than a 10-minute video some of the things that we did in the trading room for people that weren't there, and for people again that were there, just to go back and look at what went on. The first trade we got involved in was Amazon, and again, now I'm trying to keep this video short, so I'm going to be quick here. Basically, what Amazon's been doing is it's been bouncing off of the bad earnings results from a couple of days ago, and so we gapped higher today, gapped higher than the price structure from the previous day. This is a 1 minute chart, and made these big rangy bars at the start, and then we consolidated into this nice little kind of wedge. And somebody commented that Amazon looked like it was consolidating. So I looked at it and I said, you know what? This looks like a nice little wedge right here. And so I said that in theory, you've made a move higher than the previous price structure, and now you're consolidating this. And that I thought there was a good chance that price would move out of this pattern, out of this kind of wedge pattern, and go higher. That was the premise, because the market wasn't really selling off too hard this morning. It was just pulling back from the opening gap higher. And I made my stop at the low was 89, and I think my stop was 85. I barely got avoided getting stopped out. So, again, I encourage guys to look at price. Basically got held support right at the previous swing highs, and I think my stop was right in here somewhere. Was a bit lower than that, so at least I had enough room to let the trade go through. But my problem was that stock traded up here, and if I draw a continuation, let me do that. Hang on 1 second, I'm gonna draw that. All right, so here's the continuation pattern that we had on on the move. So we made the gap higher. So you take it from the top of your swing high, and you pull it back. And here I left it at this first pullback, even though we went lower here. I didn't drag it lower because that just it poked outside and came back in. So to me, that was the level to concentrate on. And if you look at the 61.8 level, which is the crucial level, we didn't make it above that level. So the mistake I made probably was to be a bit early in the trade, and I didn't let the break happen and get above the 61.8. I wanted to get in early and get a better price. So the issue with that is, and I'll talk about it in 1 second, is that it set my mental side of my brain in the wrong place. Basically, so price pulled back here, and I barely did not get stopped out, and then we moved back into the grid, which is fine. And again, we weren't getting above the 61.8. You can see the big upper leg on this one, pulled back, made a higher low, held above the 50 EMA, made another attempt to get above the 61.8, couldn't make it, pulled back, and this time we held above the volume weighted average price, which was a good sign. And I think it was right in here where I said, you know what, the market didn't look like it was really doing much. There was a couple stocks that were doing some stuff, so I thought I'm going to let go of this stock. I didn't think it was going to do anything, so I let go, and I think I lost 10 cents on this trade. And shortly thereafter, I came back to it and looked at it for more than a half a second, and I said, you guys, I think I did the wrong thing. I think that these small candles and the higher lows mean that this thing's going to go higher. And of course, one of the problems I have is that when you have a stock that either stops you out for a loss, or you got out without making any money, or a small loss, you have a hard time believing that trade's going to work going forward. So the issue here was I got involved in this trade too early on before it proved to me that the pullback was over. And really, to me, actually, you should not have gotten involved in this trade until it made it above the VWAP, held the VWAP. This was the area to get involved in the trade for the first time, not this area right here. Like if it had worked out, then you go, yeah, look how smart I am. But the reality is that was so early in the day that nothing had been proven yet. So the chances are you're going to see more whipsaw action. And this is now you see, you get more time. People have more confidence in what they're doing in terms of the trades. You get less retail action here than you do in the first part of the day. So that was the lesson from Amazon. So sure enough, price made it to, at least it made it outside the grid, and then I was up a dollar. If I'd still been in the trade, I'd been up a dollar and change. But price is holding above. Let's go back to a 3 minute chart so you can get a better look at this continuation grid. Uh, Crap, right? So we made it to me. It would have been up $2 on this trade if we held it. If I hadn't sold it here, and the reason I sold it there was because it didn't do what I wanted it to do, because I got involved too early in this trade. So that's the lesson from Amazon. Okay, now let's go to the other trade we did. Hang on one sec. All right, the other trade we did, one of the other trades we did was Freeport McMoRan. Now it's been selling off the last couple of days, but it gapped higher this morning, but it couldn't get going right off the bat. So it actually sold below the opening range, popped back in, pulled back, made a higher low, and we looked at the stock for the first time right when the stock was down here, and I said that this was actually, if you were thinking of getting long Freeport, this was not a bad spot to get long, because at least you're pretty sure that we were going to go back to test the bottom part of the opening range. Now, you don't know if it's going to fail there or what it's going to do. No one knows. But by being involved in that trade, you're long, and you get to be the beneficiary for this move here, where you go from into the pattern and make it all the way to the opposite side of the opening range. So there was 50 cents. So you had about a 75-cent trade there you could have gotten involved in. But anyways, what I said when we started to hawk this was that you want to see now what it was going to do at the top of the opening range, because it showed you, and right here actually the market still really was in a consolidation point, so it actually started to show you relative strength in this move going higher. And if you see this candle action here, it looks corrective. This looks like it's got a purpose to it. So I said that this had potential to go higher. So we basically got involved. Where did we get involved? We got involved in a 1 minute chart, which is sometimes easier to see. I think we got involved right in here. Yeah, it was right in here at 54 cents. I think I bought, right? But the volume really wasn't coming through. If you take a look at the volume wasn't coming through in this break. So I said that I didn't think it had great potential for a move higher, but that we looked at this as a flagpole and a pennant here. So if I were to draw that, that was my pattern there, and I took a look at that as the pole. This is the flag, and I showed people how to measure that in terms of targets. I use a 61 and 100% target based on that pole size, and we got I forget where our targets are. I think 46.75 was the first target. Was that the first target? Or 85? I forget the number now. Anyways, that was this opening range trade, and that's why we got involved. And it really hasn't shown that to be a bad trade. It's not. It doesn't show you that it really wants to get going yet. But it is only 1 o'clock Eastern time right now. So this could. I'm still long this thing, and my stop is at 22 cents, 46.22 right now. And I think I said once I hit, I think it was 85 was the target, first target. Once I hit that, I was going to move my stop to, move it to 60 cents. And then once we hit the next target, which was, I think, $47. Again, it's on a different series of charts, so I can't really see what my targets were right now. Anyways, that's what we did with there. The other one was Visa. And Visa was acting well based on MasterCard's earnings. And actually, hang on one second, I'll flip it to my other colored chart. Okay, so here's Visa. It made a move above the prior price structure, made a nice sort of one push up, pull back, second push up, and now a bigger pullback. And it pulled back and was giving us nice yellow candles on the 3 minute chart. And I went long there at I think 106.94 and change. And my stop, we looked at it, and again the targets aren't on here, but we looked at it, and I said that my target was about a buck 30 for a game. So we said that I would like to have a 2-to-1 ratio on your profit to loss potential. So then I said my loss should be 60 cents roughly, and I got in at roughly 95 cents. So my stop I put on was 106.35. So that trade's still alive right now. Again, it doesn't look like it's in a rush, but it could just move all in the last hour of the day. So I'm gonna let my stops sit there on the Freeport and on the Visa, and just let those ride out now today. And we looked at a couple other things. I got a few more minutes here in this video. So what else did we look at? We looked at Goldman Sachs, and let me just get rid of some of these lines. We looked at that opening range, and price had pulled up here. It made the third push higher, which means that we should see a correction then, or pullback. And I put an audio alert in there for, I think, 116.70 or something like that, or 65. It got rang on that bell there, and we didn't really track it any further than that. But the theory was that you had a stock that's been very bullish, broke above the opening range, and you want to see what it does when it pulls back to the top of the opening range. And you can see here that it was nice. It made a low here, a little marginal lower low here, and made a higher low here. So that was your signal that if you wanted to buy Goldman, probably to get involved there. But again, it's really extended on a bigger time frame. So I just, like, if you look at this on a 60-minute chart, you know, daily chart even. Let's take a look at a daily chart. We got blue candles, and we're basically at this prior swing high here. So I think to get long anything more than a short-term scalp is asking for trouble. Again, if you go back to my afternoon trading plan, you'll see my thoughts on where the market's going to go, and I think I think what we saw was not the big fourth wave I was looking for. We saw a small fourth wave, and so now we're getting the fifth wave push higher in the bigger third wave, and then we're going to get a bigger correction, which is where I want to get my swing trades on board. Okay, let's go back to what else did we look at that was interesting. We looked at Netflix. Here's a 3-minute chart. I forget. Actually, to tell the truth, I forget what we were talking about on Netflix. What else? Let's pause here. Let me give me a chance for my brain to think. Okay, I can't really remember too much else of what else we were looking at, but I'll just go through a few charts because I got a couple of minutes left here. Here's gold had a big sell-off because of the strength in the economy, right? And the thought that interest rates are gonna move higher. And so here's a chart here. So again, do you get involved on the gap or do you wait for the pullback? Well, in the gold case, it would have paid to get involved right at the open. And so it's hard sometimes to judge what you should do. So the only thing I want to point out here is that here now you've had a B, C corrective bounce, and you really haven't been able to sell off from there. So I think the potential for this afternoon is not all that great for gold for further shorts, and I'd have to look at it a little closer for next week. But I'm just looking at let me just look at a daily chart down here away from your screen. Yeah, so gold is at a place where it's an obvious resistance area for. Let me show you that on a daily chart. Look at gold there, right? So we're making trend strength is rolling over there a bit, and if you draw a trend line, where are we? So we broke this trend line, which was pretty bullish, right? Now we're probably going to come back and test it at least. So that's $6 lower. So we could see some follow through next week. So the ancillary play there is bonds, right? And bonds got hit hard today. And so maybe that is finally going to start to roll over here. And of course the short side of that is the TBT. And that looks like maybe there's a swing trade involved here. Now I haven't been involved in this since basically early January, but this has got potential. And then, oops, this trend strength is still increasing, but there's going to be a trade involved here. Volatility is going to get whittled down to zip, and then the risk reward is going to get one-sided. So we haven't started to see that signal yet to get along the VXX volatility ETF, but it's going to happen. It's going to happen, I think. Again, where the risk reward is in favor of that. So I will call it a day at that and talk to you guys soon. Okay, bye.